Hi traders, you're welcome back to the Forex Geek channel. If you are looking for a reliable price action pattern that can help you catch strong market moves, then this video is for you. Okay, we're going to be diving into the drop base rally. Right, it's a nice setup. Okay, the drop base rally is a powerful setup that's all about identifying key moments in the market where price drops, consolidates, and then rallies with momentum. Okay, so by the end of this video, you'll know exactly how to spot this pattern, how to trade it with confidence, and why it works so effectively in the market. If you find this content valuable, be sure to hit the like button, subscribe to the channel, and turn on the notification bell. Okay, now let's just get started real quick. What exactly is the drop base rally? The pattern, what exactly is this pattern? Okay, simply put, it's a price action pattern that unfolds in three key stages. All right, it unfolds in three key stages. The first stage is the drop. All right, the first stage is the drop. Now, at first, the price drops significantly from a higher level. All right, creating a sharp downward movement. Now, this drop often happens after a period of consolidation. The drop often happens after a period of consolidation, right? Or a trend exhaustion. Then the second stage is the base. After a drop, price consolidates in a tight range or sideways motion. This is where the market is essentially building energy for the next move. Then finally, the rally stage. After the base is established, price breaks out of the range and rallies upward with strong momentum. Now, this pattern is considered a bullish reversal signal when seen at the bottom of a downtrend, but it can also signal a continuation of the trend if it occurs in an uptrend. Okay, understanding how this works can help you catch big moves in the market. Now, let's just talk about how to spot a drop-based rally setup in the market. Here's what you need to do. Okay, what you need to look out for. You have to look out for the drop. Okay, the first part of the pattern is the drop. You want to see a sharp move downward that breaks through a previous level of support. All right, it has to break through a previous level of support or consolidation. Now, this drop should be strong and momentum based, not a slow, gradual decline. Then the base. After the drop, look for a consolidation range or base where price starts to form a sideways pattern. This base should be relatively tight with price bouncing within a defined range. The tighter the range, the better the base is. Then the rally. Finally, after the base is formed, watch for a strong upward breakout. This is the most important part of the pattern. You want to see price break above the consolidation area with strong bullish candles, right? This is the most important part of the pattern. And then you should also be looking out for high volumes. All right, so let me just add the volume indicator so we can take note of that. Okay, so you watch out for increase in volume. Watch out for increase in volume when the breakout happens. This indicates that the market has found strength and is ready to rally. Now, the more clearly these three stages form, the higher the probability that the drop-based rally will lead to a solid trade opportunity. So why does the drop-based rally work effectively in trading? Well, it comes down to market psychology and the actions of institutional traders. Smart money movements, energy build-up, and momentum shifts. Okay, so these are important components, right? So when price drops sharply, understanding the concept, right? When price drops sharply, it often signals that institutions are taking control of the market. After this drop, the base forms as smart money accumulates positions, waiting for the right moment to push the price higher. Then the base represents a period of consolidation where the market is building energy for the next major move. The consolidation shows that buyers are stepping in and preparing for a move to the upside. Okay, Then for the rally, this is the point where momentum shifts and price begins to break free from the base. This is where the institutional orders are getting started, or rather are started to be filled, right? Are started to get filled, and the market starts moving in the direction of the rally. By recognizing this pattern, you align yourself with the smart money and can position yourself to capture these strong moves. So how do you actually trade the drop based rally? Once you've spotted the pattern, here's the step-by-step process. You wait for the base to form. Okay, don't enter the market right after the drop. Let the market consolidate and form a solid base. This gives you a clever idea of the level where price has been accumulating. Then enter on the breakout. Once the rally begins, look for strong bullish candles like what we can see here. Okay, look for strong bullish candles breaking above the consolidation. Then you can enter right after the breakout or wait for a retest of the base for a better entry. Then you set your stop loss just below the base. All right, below the base. This protects you if the price fails to rally and reverses back. Set your take profit at key levels. All right, set your take profit at key levels. Look for significant resistance or previous highs for your take profit levels. Always use proper risk to reward ratios, aiming for at least 1 to 2. If you're risking $1, your potential profit target should be at least $2. Okay. Now, while the drop-based rally is a powerful strategy, there are common mistakes to avoid. Some common mistakes to avoid, and one is jumping in too early. Don't rush into the trade as soon as the drop happens. Okay. Always wait for the base to form and the breakout to occur before entering. Secondly, do not ignore market context. Ensure the overall market trend supports the pattern. If you are seeing a drop in an uptrend, it may not be the right setup. Okay. And then finally, wait for confirmation. It's always important for you to wait for confirmation. Always wait for the breakout with confirmation. If the rally starts to lose momentum, avoid entering until price clears the base clearly. Okay. Avoiding these mistakes will help you become more successful when trading the drop base rally pattern. All right. And that's a wrap for this video. Now you know exactly how to spot and trade the drop base rally pattern. This is a great way to align with market momentum and trade with more confidence. Okay. If you found this video helpful, smash that like button, subscribe for more trading strategies, and hit the notification bell so you never miss an update. Got any questions about the drop based rally or trading in general? Drop them in the comments below and I'll be happy to help. In the meantime, thank you for watching and happy trading. I hope to see you in the next video.